Hi everyone, today let's talk about GameStop again. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So it's been a long time since we've talked about GameStop. The GameStop saga was many years ago at this point, but Roaring Kitty is back, and you can see they mentioned him here back on the net, and we are hearing from him again. I assume that he likes the stock, and as a result of this, short sellers have already lost $838 million on the squeeze that we saw from GameStop. It already has a 100 out of 100 squeeze score prior to the day's trading, meaning that it was already set up for a potential squeeze, and now we're seeing it again. And on the back of this, we saw a 74% rally in GameStop. We'll have to take a look at some of the technicals here, but understand that this is happening once again. We're starting to see some meme stock frenzy, which to me is an indicator again that markets are expensive and people are looking for places to put money. Moving over to Fear and Greed, we stepped up to a 50, so we're exactly neutral, right in the middle here. You can see we're having a feeble bounce. We really haven't been able to recoup some of these rallies here going back to November, and we haven't made it back into this range from January or February yet, but markets are recovering a little bit. Still greed here on momentum, strength, no change, still in extreme fear, which I think is a little bit overstated at this point. Breadth still hovering in neutral, put call ratio, greed, and then volatility. It is neutral here, but look at this little spike up that we saw on volatility. We talked about some levels there. We'll definitely look at that later. And now bonds have both neutraled out at this point. We'll have to take a look at yields to see what's going on there. Moving over to seasonality, this period continues to be weak on seasonality, but we really haven't seen the dips yet. I do think that they're coming, and I do think we're going to see weakness in May, but it hasn't come to fruition yet. And I think if it's going to happen, really this week is the time to do it, and then we can see that kind of double bottom into the end of the month. Moving over to earnings, just for a moment, there's not much left here. Home Depot tomorrow, Walmart on Thursday, as well as John Deere on Thursday, and that'll pretty much wrap it up. Palo Alto Network fairly interesting for next Monday. Moving over to the economic calendar, there was really nothing for today. New York Fed 1-year consumer expectations for inflation went up to 3.3 versus 3, so continuing to see slightly higher inflation data. Tomorrow we do have PPI. That's going to be interesting for sure. If that comes in hot, you would expect CPI to come in hot, and then we have Fed Powell speaking at 10 o'clock. And then don't forget, if you hold anything into the close for the Tuesday session, we do have CPI early in the morning at 8:30. That's absolutely going to push around markets, as well as retail sales at 8:30. So tons of big data coming out for the Wednesday session. And if we get another hot inflation read, that could absolutely be bearish for markets, and it could be quite catastrophic in my opinion. On top of all of that, it is a third week options expiration. And looking at the total options, this actually went down quite a lot to 2.8, almost 2.9 million. Put call ratio also came in a lot to 3.14. Stock price still at 520, max pain here at 510, so still expecting that to dip down a little bit. Top of the puts is 521, 522, so there's not really a lot of upside for the Friday session. Everything continues to show risk to the downside in my opinion, but that 500 put wall is there at 149, and then there's some here at 510, but a 510 finish seems to make sense for the end of the week. Moving over to the charts, looking at the S&Ps here on the hourly and the daily, you can see once again we hit that trend line, pulled back, and we're now back below 520.88 again. So we tried to get above it on the Friday session, and then here Monday, gapped above it, hit the trend line, and then broke down again. Momentum on the daily chart, stepping to bearish for the first time in a while. Been on this colossal run for the past 7 days or so, but now we're seeing a step down in momentum. That's going to be quite bearish in my opinion. We also have what seems to be a bit of a double top here on the hourly chart, so see how this plays out. I still think that 55 EMA on the hourly chart needs to break. That's at 519.81. If that breaks down tomorrow, you have a trend support here at 518.82. And then if this area breaks, this is going to pull back down to that 144 in my opinion, which is back down in the 513 area, which fits with that overall thesis of a pullback into the 510 range for the end of the week. Moving over to the Tasty charts, there's really no change in the thesis from the Friday session. You can see we're still headed to that upper ATR, which is at 525.23. You can also notice that it is sloping down here still slightly every single day. So by tomorrow, it should be a little bit lower, about $1 lower, 524.50 or so. And then looking at the 4-hour chart, you can see we didn't quite hit that upper ATR, which is a little bit concerning. Usually that's a sign of some weakness. You can see here, you hit it, you pull back, that's healthy. Tried to regain that momentum, pulled back, after not touching it, and then now it looks like we're set to break down a little bit more. Momentum a little bit bearish there on the volume weighted MACD. And then looking at that hourly chart, you can see on the Friday session, we did see some bearish conditions after taking out that ATR stop. And then on the pre-market candles, took out the ATR to the upside. So we have some choppy price action. For sure, it is sideways chop, and definitely showing some mixed signals across the different time frames. Moving over to the NASDAQ, very similar thesis here. Again, daily momentum stepping to bearish. First time we've seen it in a while. That is very concerning. We're also at that critical level, 443.91. We touched that level almost to the penny again. So we hit it on the Friday session, topped out at that level again, went sideways. It still held a higher low, so it was positive on the day, 0.23. But we're also hanging out on that 21 EMA there. Again, same thesis, got some trend support, got the 55 EMA there at 441.55 and my level 441.81. So critical zone there. If this structurally breaks, you would expect a 438 level to be touched again. And then you got the 55-day moving average there at 436.90. So right in that zone, you would expect some potential support, but it seems like we're going to see a pullback into that zone here pretty soon. And then looking at the Tasty charts here on the hourly, I just wanted to mention basically the same thesis here from the SPY. ATRs had bearish conditions on the hourly on the Friday session, took that out pre-market and then sold off. ATR support at 441.71, but that choppy price action flipping from bearish back to bullish after being bullish for a while. So definitely some mixed signals going on the hourly chart. And just briefly mentioning that 4-hour chart, again, very slowly grinding up. Couldn't even hit that second ATR to the upside this time. That's at 444.47, nowhere near that upper ATR, so grinding higher just barely. Momentum shows a little bit more bullishness here on the Qs versus the SPY, but overall looks like a very slow grind up or sideways chop. Moving over to the Russell and the Dow, you can see the Russell is still pulling back on momentum, and you can see the Dow stepping towards bearish for the first time in a while. Definitely some reasons to be concerned. Looking at the Russell, though, got up to that 206.50 area, same one from the Friday session, and then sold off. It still was positive on the day, 0.21, and it looked very strong early in the session, but then we finished barely changed, about 50 cents higher. And then the Dow was actually down 0.18. We talked about that Friday candle being a gap up in doji, and now this looks like it's probably going to sell off a little bit, definitely extended. And basically the same thesis as the SPY and the NASDAQ, sideways choppy price action, probably leading to somewhat of a pullback. Moving over to stocks that moved here today, let's go ahead and talk about it. We got Gamestop, and look at that candle, up almost $13, 74.4%, massive volume, massive momentum, and it was on a breakout, so there was some idea that this could have happened. Got a push on the Thursday session, broke this trend line, held that level, and then it came here, massive rally, got all the way up to 38 at one point. Let's go ahead and go to the weekly just to give us a little bit better perspective. So you can see this was the GameStop mania. We went from about 90 cents up to $120. So it was a massive run, obviously. GameStop mania, movies made about it. Everything was crazy. And since then, it's kind of been in this bull flag, if you want to call it that. It's been slowly grinding slower, grinding lower. It didn't really have any massive breakdowns or anything unusual. Did go from $28 down to around $12, so that's about a 50% move. But then here, we did have a lower high. And if you look at it, the RSI levels on that was a low, slightly higher low, even though price was a little bit higher, was a little bit lower. So you could have said there was some divergence there looking for a rally. And it wasn't doing nothing leading into this massive gap higher. We had 3 bullish weeks in a row. And based on that, that was already a 72% move into those 3 weeks. So GameStop's been choppy. It's been moving around. You can see this was a 47% move there. It's been moving pretty aggressively to the upside, and this time it broke higher with the news of Roaring Kitty. In terms of levels, you can see I do have one here at 31.62. That marks the high back here from 31 October of 22. You can also say the high here of February 14th from 22, right in this consolidation. Chopped on it a few times, but it is a level there. But we're back above all the EMAs and SMAs. This is going to be interesting to watch. You can see it's up another 10% after hours from $30.45 up to $33.50. So massive movement here. Looks like we're set for a little bit of GameStop 2.0. Can this regain the highs all the way back in the 120s? With everything that happened with GameStop last time, it seems certainly possible. Otherwise, back to more sane news looking at the Mag 7. This is 5 days in a row of sideways choppy price action. Momentum continues to fade here, but it was an inside candle up 0.09, not doing much of anything, chopping on top of that highly traded zone, and we'll see what happens from there. Moving over to Apple and Tesla. Both of these actually had a pretty solid day today. Apple up 1.76%. Again, we've been talking about 182.37. As long as that level held, we should push to the next one. And finally, that's happened. It was on a massive gap higher and touched that level. Now you're at resistance, so it doesn't look great. If it can push through that level, then you could look for 189.96. But right now it's at resistance, down a little bit after hours. We'll see how that plays. And then looking at Tesla here, we've been talking about this one for a while. It's looked terrible, but it hit the 21 EMA, got very close to my level, 167.34. I put out a video last week, I believe, about how this was going to fall further, but if it held this zone here, that it could absolutely push back up to this previous high, if not even higher, establish this as a higher low and then rally. We've seen consolidation in this zone before. It's currently holding a higher low off of this previous low, and if it's going to do it, it really needs to do it now. So the thesis on Tesla for me is still that this is an important zone. I think it can hold here pretty tight on the stops. If 167 goes, this could absolutely go back to these previous lows, but if this holds up here, I think this could realistically push up to that 144 EMA in the 203 area. Moving over to Amazon here on the daily chart, I just want to highlight the fact that we've seen 2 bearish days in a row, down 0.48 again here today. Momentum stepping down for the second time in a row. This seems like it's got some momentum to it, so you would expect this to follow through. We'll see how that plays. Last time this happened, we had about 6 or 7 days of straight bearish movement on this previous move. If that happens, then you would expect a push down to that 174 area, or even worse, if this midpoint breaks, you would have a clear double top here, and that would be very, very bearish. Still have some support at trend at 183.66 and then 181.41 below that. So structurally it still could hold, but this is definitely concerning, looking like a double top. Moving over to Roku, stock I have not talked about here recently. They had a terrible earnings, dropped off massively from 94 all the way down into that 63 area. Did go a little bit lower after that move, but you can see we had support here at this 55.59 level. That was the bottom before this massive run that it had, and now we're back in that zone here. We didn't actually touch the trend line. We're right in that same zone. You can see we already had a bit of a double bottom. You can see we're holding a slightly higher low. Looks like a bit of a pennant there, but looking at momentum, bullish. RSI looks bullish. If this breaks this downtrend here and pushes above that 55 EMA, could see some bigger moves on Roku, potentially pushing into that 74 area. This is a stock that moves a lot, extremely volatile. You can see here 55 all the way up to 107, so almost 100% gain there. And if this breaks out again, we could absolutely see a strong move through that zone. Moving over to staples and discretionaries. Staples tried to break out, but it couldn't do it. We did close above it on that Friday session, and then we closed back below it here on the Monday session. So 77.50 zone of resistance. We'll see if it can hold above that. Right now it can't. And if it does break down, you would expect to push back down in the 75.40 area, potentially hold a higher low, maybe around 76.40. But if that structure breaks, then 75.40 is your next one. And then looking at discretionaries, 2 bearish days in a row. Again, expecting this to pull back at least to the 21 EMA at 175. To me, this still looks like risk off with discretionaries falling after consolidation and a lower high, whereas staples are basically right off of their most recent highs. And then moving over to what were the hottest sectors, financials, after a massive gap higher in Doji on the Friday session, turning in a negative 0.14 to support at 41.65, almost to the penny. If that zone holds, no issues, but you can see bearish momentum. We've been seeing that on lots of charts, and then similarly here on utilities, saw a step towards that bearish momentum. Super overbought. 71.83 was the level. We touched it twice over the last 2 trading days, and now we'll see if this has some pullback in it. They were definitely extended, and these were holding up markets, and if they start to pull back, that could be a bearish indicator. Moving over to breadth, we did get a bearish candle here on 20-day breadth. We didn't quite get to that 86.50 area. We don't always do it. You can see on this previous topping pattern, we kind of stalled out around that 81.60 area. And that's very close to where we are here today. The high for today was at 80.27, so you could argue that that is already there. But really, I like to see that 80.60, 86 area. Otherwise, momentum stepping down, RSI breaking down a little bit. 50-day momentum hasn't quite done it yet, so Still waiting for that. Did touch that 55 EMA there at 60.18. We'll see what happens there, but right now still bullish, but some hesitancy on that 20-day breadth. Moving over to the dollar, we got a little bit more bearishness here on the dollar. We talked about this being resistance, that 9 EMA at 105.3. Again, seems like this is probably going to roll to the bottom of the channel. That should be somewhere around this 104.6 area. If that happens, that's going to give equities some upward momentum, but right now it hasn't happened quite yet. Continuing to watch the dollar very closely. Critical structure here, waiting to see if that resistance holds, and if it does, we should see bullishness in equities. Moving over to yields, you can see basically doing nothing here today, down very slightly on the 2-year and the 10-year, still in the same consolidative areas, similarly to the 10-year. Momentum on both of these continue to roll to the bull side a little bit, so that seems like we're going to head at least to the 21 EMA here on the 2-year. That would be 4.92, and similarly here on the 10-year, that would be 4.58 or so, right in that same zone. Then we'll see if we reject off of that area. Obviously, PPI and CPI are going to give us direction for yields and for equities tomorrow and Wednesday. But right now it seems like they're set to go a little bit higher based on technicals. Moving over to bonds, you can see J&K was up 0.01, basically unchanged on the day, very similar to everything else, continues to chop, looks a little bit bearish with momentum selling off, and then similarly here on TLT, still finding resistance at this trend line, expecting this to pull back and hold up a higher low at the 98.16 area, so overall, slightly bearish thesis on bonds. Moving over to volatility, interesting to see both of these going quite a bit higher here today. Bond volatility going up a lot, 11.8%, momentum rolling to bullish, so there's definitely some concern in markets as we head into CPI, makes sense. And then looking at the VIX, again, we've been watching this, we're right in the same zone. We thought it was going to pop here, and sure enough it has, momentum rolling to bullish. This seems like a bit of a leading indicator. We should see some more bullishness on the VIX, which should be bearish for equities, so watching this one closely along with the dollar tomorrow. Moving over to my accounts, you can see I made a few $100s on the day. I was down in my IWM when I definitely shouldn't have been. Based on this position, I should have made a few cents, but I really didn't. I traded up to 206 for the Wednesday session and then rolled back down and into 205 for tomorrow's session. Made some money on that. Hopefully we can pull through tomorrow. Still looking at about $1 credit on that position at 205, so should be in good shape there. It's just below it, just barely out of the money. If that comes through, then this should break 1,000 year-to-date profit. That would be awesome. And then looking at my main accounts, $300 on the day makes sense. I had my puts all throughout the session at 442. Got max profit on those, closed out of the money. And then I still have these 444s for tomorrow. We'll see how that plays. Still about $1.50 profit potential on that position. And I am a little bit more conservative here. You can see I'm still out of the money at 442. And you can see the NASDAQ actually did roll down just a few pennies after hours. You can also see there's a little bit more volatility in there, so I was able to get $1.23 credit for being $1 out of the money, so a little bit more profit potential with a little bit more protection. And then I haven't done anything with these 437s. Still max profit on that is basically right where we are right now, 443.10 based on that $6.10 credit, and that's where we were basically right at the close, and now we're selling off a little bit after hours. So I'm going to leave that alone for right now with a strangle for tomorrow, looking at a slightly bearish lean. Let me know down in the comment section what you think of Gamestop. Is the Saga 2.0 coming? Is this going to rocket back up to $120 a share? Or is this just a short-term blip in the overall charts? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.